Hello and welcome to Dukascopy TV. I'm Andrew Saks-McLeod, Chief Executive Officer of Finance Feeds. And today, joining me in the studio in Geneva, Switzerland, is Marc Spaelti. Hi, Marc.
Hi, Andrew.
Marc is Chief Operating Officer of Dukascopy Bank, and Richard McLeod, who is a veteran banking executive with 43 years' experience.
Hi, Andrew.
Hi, nice to see you. So today, how did we get where we are? We've said this a few times, but we've only looked at across the short span since FX came into being. But how did the automation of the whole financial sector come about in the first place, and why? Was it really a natural progression, or was it a byproduct of something else?
Well, in the 1960s, 1970s, automation was well underway. And the volume of traffic, due to the increase in customers, meant that there was more and more paper. And certainly by the early 70s, it was a matter of great concern for the banks. They were being inundated with paper, they were drowning in paper, and the big call was get rid of the paper. So that prompted computerization. And that was quite a big process for the banks. But in the long term, it was something that it was absolutely necessary to cope with the volume and the business that was being increased at a particular rate. And that was good for future business for the banks. There was just one little hiccup, and that was the decimalisation of currency in Britain, so it could match the computer requirement.
Right, a binary system.
Absolutely.
Yes.
And after that, following the computerization of the banking systems, enabled technology to proceed and do some great and remarkable things with the banking processes, which were historically, in a word, paper.
Right, very interesting, because here we are, very high tech. You are involved in leading the operations of one of the most technologically advanced companies in the industry. Is it really a byproduct of something else that led us to start going down this route, or did we think that maybe traditional banking needs to be expanded across borders, and that this was a way of getting it into the hands of the retail customer from their home?
That it got into the hand of the retail customer, I think that was a byproduct of the automation.
Right.
As we just heard, banks were drowning in paper. They had to come up with other solutions. At the same time, there was the IT technology that was getting faster and better. I recall the days when we first had an in-between solution where the traders were still keeping their trade positions on a blotter, written down by pen, and then passing the tickets to the middle office, who were putting them in the computerized system. And at the end of the day, they were basically matching off the paper slip with the computer result, and only if that was matched, you could actually leave.
This must have been very illiquid assets. It can't have been FX, because by the time you've gone into the other office, that's it. The trade has moved. So it must have been stocks and equities and things like that, right?
It was done for all asset classes.
Was it?
In fact, yeah, absolutely. So as time went by, of course, we eventually eliminated the paper slips completely. Came into the inputting straight into the systems from the front end, which of course eliminated large parts of the middle office work. As this progressed and systems got more sophisticated, you were able to accommodate much larger number of tickets, and with that the ticket cost dropped, and with that you could make smaller deals with smaller commissions, and eventually the retail clients came in, and that's where we stand today. At a Dukascopy, we process anywhere 250,000 tickets in a day, and really? Of course there is absolutely no manual labor involved.
That's right. Fully automated, right?
Fully automated.
Even the aggregation of the system and everything, fully automated? Yes. So can you imagine doing that back in the 1970s and 60s, when there was no technology of this type, trying to automate a feed aggregation from the banks? So they would have to use, I think at Swiss Banking Corporation, they had some kind of conveyor belt system to send orders into the back office. Now you have a feed aggregator which is all automated and does it in a fraction of a second. This is remarkable. But can you remember these times?
Well, I do. But also with this, going back to paper, there was a great concern that saturation point was being reached because of the increase in the volume of paper. As more paper was introduced, they needed more staff. and this was an increase in cost. And costs were increased from many directions in banking, premises, branches, new equipment, and something had to be done. And
you of course needed locations to keep all this
You
paper.
did. You had to have warehouses.
You had warehouses. They had to be secure against
Yes.
fire.
You probably-
Against
exactly, because if you have a fire, that's the end. There's no disaster recovery system like there is today.
No.
And also, you probably had by law to keep them for a certain amount of
Yes.
years, right?
yes, customers tend not to like the fact that you may have lost their records.
That's
They-
for sure.
it
That's very
upsets
true.
them.
It does indeed. So you have probably even despite that, you have all that operations, all that staff, and all that slow process, but just for a local client base.
Yes.
Can't deal with overseas customers like that unless they come to the office, which is labour intensive and takes forever.
Yes.
So that's another matter. But Switzerland seems to be a place which is attracting a lot of global retail Forex customers now.
Well, Switzerland, of course, has a tradition of attracting banking clients
Yes, it
from
does.
all over the world.
Yes, it does.
And yes, of course, with a few brokers in the country that are have a good reputation and serve clients around the world. That's it's still ongoing with clients from many countries flocking to Switzerland
Yeah.
to open accounts.
And it's interesting the modernity that you can see now with the few brokerages that are here. They're not operating as a traditional entity. They have got plate glass offices, high technology proprietary trading platforms. Most of the development team are in their 20s and 30s. They're not as they were in the days of the previous generation, where the CEO would be probably almost retirement age. It's not like that anymore, right?
No, certainly not. It's very much gone along similar to the IT industry, where you
has.
have CEOs in jeans,
That's right.
barely 20 years old, just
That's
off
right.
off the university, if they went at all. That's a very similar thing that we see in the banking industry as well.
Which I like, I have to say. I think this is a good thing. I'm really in favour of that. Coming from the financial technology sector, I like that. I think it's a good avant-garde way of developing ultra-modern, high-technology systems that can power Swiss banking operations to attract global customers. I think that's a good thing. So that's absolutely a 40-year, we've had a good look at a 40-year window where we've seen really the adaptation into what we have today. Very interesting indeed. Thank you very much for joining us, Marc Spaelti and Richard.
A pleasure.
See you soon. I'm Andrew Saks-McLeod, Chief Executive Officer of Finance Feeds. This is Dukascopy Television. Thank you for watching. See you next time. Goodbye.